to Trading Lounge for the European indices for the 20th of March, and starting with the DAX here on the daily chart. We're looking at this low here either as 5C or 4 here with wave 4 here. That means we'll just continue higher up through here. If it's intermediate wave 3 here, then we need to treat this move here as corrective, pulling back to the wave 4 of one lesser degree as intermediate wave 4. And we're very close to having a top in through here, which would probably line up with the equinox. All the GAN traders will be excited about that. So yeah, let's take a look at this particular trend here. Yeah, so let's just go in and have a look. So on this particular structure here, we can count this up for 5 waves here. If we use this as wave 1 and 2 here, and 1 and 2 and 3 and 4, and 1, 2, 3, 4, 5 for the third wave, ABC for the fourth wave, and then 1 and 2 and 3 and 4 and 5 here. There may be one more little high moving in here, just here, before we fall down on this, but if that's the case, we'll pull back to close on the 11,000, 10,800 here for that move. And we'll have a look at this top in a moment, but just want to point this particular structure out here. And this count here would have this low here as the intermediate wave 3, an A wave to here, ABC for the B wave, and 1 and 2 and 3 and 4 here. And as I pointed out last time, we were looking for 5 waves up into this structure here. So since the last time we've talked, we've moved up into the 11,800. The 800 is important. We always call 8 a profit-taking number. And this structure could also be complete. And if this was the case, then we would be moving, making new lows below here, and also the 10,000 here as well. So that's significant, but step by step with all of this. And if we just cut through to the probably the hourly chart here. So we've been, first of all, let's just get the trade out of the way. So we've been long and we've moved our stop up into this area through here. We've survived this correction at the 65 level. So 65 is halfway between, as you know, the trading levels. We use the Fibonacci numbers as price, 1, 2, 3, 5, and 8. So 5 here and 8 here, the halfway mark here always plays out. The 65 number plays out well, and we've always used that. So in this instance here, if you haven't taken profit at our target here at 11,800, then we need to put the stop into play under here. And yes, it can also have a move down through here, take the stop out here, and come back at this point here as well. So let's just have a quick look at this. Okay, this is just on the tick chart here. We could count from the top here on the tick chart down as 1 and 2. Not quite here. I can see that we've got 1, 2, 3, 4, 5 and 1, 2 here. So this is actually 1 and 2 and 1 and 2 and 3 and 4, and this is not, and 5. So so it can be an A wave, a B wave, and a C wave to this point here. This here is offering 1, 2, 3, 4, 5 here. So it does look like a bit of an impulse wave here. So we'll just put the stop under here at this stage here. Hopefully that you've executed the trade at this level here. But we'll just pop it there for the time being, and you can move that stop up, trade it up, up through there as well. Now, we can look at this in different ways. So I'm just going to put this here as wave 3 there, and wave 4 there, and then that would leave us with copying this text and putting this up here as wave 5, just configuring this here, and that would also leave us with changing these here in terms of not that particular color, but in green here for these, the next degree higher here. So not that that matters at the moment, but from here, I mean, this move up through here was quite clearly in 3 waves here. So I've labeled it an A and a B and a C, and I think I've done right there. Here we can look at this as 1 and 2 and 3 and 4 and 5 up here to finish that and have that top in play there. The situation here is that there can be a new high here as well. Let me just go over this here. 1 ABC for 2, 1 and 2. Yeah, this is just not really clear in this point here. So it's possible to have one more high in here. We're either going to come up to this point here and drop from here. So that means that once that moves up there, then we can grab that here, copy that, and put that here. Don't go short just because it makes a new low here. We'd need to see the retest come back up at that point there. So it may even just drop down to the 700 area here and then go back up. But what you're looking for is you're looking for some type of move down and a corrective move up, and then we can look to go short. So at that point, otherwise we can go short under the 11,650 area there. But as I mentioned, there can be one more new little high here, and I can see this in some of the other markets. Not that it has to play out here. And also too, you know, we are looking for a change in trend, but the reality is that we're in a strong trend to the upside here. So what we'd be looking for here is that in terms of the trading levels, we know 8 is important, and we look for a classic trading levels pattern, which is the arrival, the reaction, the first high above the level, then a corrective pattern here, and it'd be like this. And sure, it can fail and move down from there, but otherwise, if it moves back up at that point and develops support here, then we can look to take any of these tops out really at that point, but this is normally the lowest one, and then up from there. So we need to wait. So currently we've had the arrival and the reaction, so the arrival and the reaction, and that could also come low. We don't know if that's completed yet. This is normally in 3 waves, a corrective wave, and then 5 waves up here that will exhaust itself, and from that point, I mean, I did have not that one, this one. So this is the pattern here. So it's the arrival, the reaction here, the first high above the level. So with the DAX, we're still at this level. What I'm talking about here is getting your timing right, getting your next entry and timing right. So we know that this is the resistance here, 11,800, and this is the same thing we're going through with the S&P as well. So this move down through here is what we're looking at the moment. So if it's going to be bullish, we'll see another high here, and that doesn't mean that it's bullish just because it made another high. It can fade from here and just continue to go down from this point. But after this move down through here, and it normally comes back to find support here, but if it finds support back up after this point, then that's when we go long. So we normally exit here and go long over here and don't get involved in all of this. So this is the classic trading levels pattern here. There's another version of this, so that is not this one, that's the overshoot pattern. We'll come back to is this one here. So it has the arrival, the reaction, the first high above the level, and then it sits here. So we normally use that as the trigger, that reference point high here, but normally we can get a second reference point here. So we'll take that one where it doesn't make a new low here. It's just like walking up the steps there. The other pattern while we're here is the overshoot pattern, where it doesn't stop here, but the DAX has stopped here, and most stocks do here. If it doesn't stop here and goes straight up through here, the distance it goes up is normally the distance it drops below. It swings low here. And what happens is whatever market or whatever level it is here, when it overshoots here, this level that it's working with, whatever price point that is, that becomes the balance line for the correction. So you just draw that in, and then you just work it from that point and up there. So they're the 3 patterns that can work, the 3 patterns that normally occur at the markets. this one here is the most popular, this one here, most common. Then we've got this one here, and then we've got the overshoot pattern at that stage. So that's that for the DAX and for the FTSE. We've been looking at this in 5 waves up as well, in terms of 1 and 2 here, and 3 here, and 4 here, and looking up for 5 here. So if you know, I've been looking at this as a triangle pattern as well, as you know, so through here and through here, and if that's the case, then if it is a triangle pattern, then this wave 4 here can actually sit on this low just here, and then we can count 5 waves up here to finish, and then we would bring that in here to finish. Otherwise, we've got, if we don't do that, and it is a bit messy in here, then in that case, then we'll have one more high playing out through here as well. So I'll just save that and go to the hourly chart. So in the hourly chart here, if it's counted as a triangle, it would be wave 3 here, an A wave here, B wave here, C wave here, an A and a B and a C here for the D wave, an A and a B and a C for the E wave here, and then it would leave us like this here, 1 and 2 here, 5 waves up here for 3, an A and a B and a C for 4, and then one more move up here. So I don't have any evidence of a turn just yet. This is probably an impulse wave down here, so we'll get an A and a B and a C point here. I guess if this market drops below the, say, 7250 here, then we would probably have a top in play at that point. Okay, so we could look to, or you could look to have a safer short position with that particular price point as the resistance, and that would, because it is an uptrend, and you know, we need to gather that evidence to make sure that it's you know, in play at that point. And this is the same for France as well. Let me just find France here, the CAC. So for the CAC here, we're looking at yeah, much the same thing here, wave 3 here, an A and a B and a C here for wave 4. So it suits a wave 4 here, I mean, as an A and a B and a C here. But in this case here, once again, we can look at this as wave 1 and 2 in here, as we've been doing. But this still looks like the third, this is why I've got the 4th wave here, because this still looks like 1 and 2 here, and then 1 and 2 and 3 and 4 and 5 here for 1 and 2 and 3 and 4. Yeah, it's just not very clear for me, so just clear this here. We can have one more high, put it that way, so be very careful about going short here. We're just not enough evidence in that. But what we can do is we can move the stop up here, so moving it from here to here. Delete that, so we can just protect what we have here, because if there's a top there, we know we don't want to get, you know, it's just mathematically better to take it at this particular point. But if I'm wrong here, then this is the top of wave. So we can have one more move to the upside here for a top. I haven't actually pulled all that apart on the tick chart, I just haven't had time. So, and also to the Italian market, the FTSE MIB. So in this case here, it's kind of interesting in that from this ABC for wave 4 here, we can count this here as wave 1 here, wave 2, and then wave 1 and 2 here, and then 3 here, an A and a B and a C for wave 4 here, and then up for wave 5, which we've been looking for there. So that's, I haven't pulled that apart, but that's probably in place. So that still means we can have one more wave structure here as well. So if I can just clear this up a little bit here. So I need to be really clear that the move that's going to come down from here is actually a wave 4 or further down at this stage here. Yeah, so there could be one more move here for this market and the other ones as well. So it's just showing up here that it's a little bit clearer in this structure coming from this point here. So it certainly can be this here. So I'm not interested in shorting this unless I really got some evidence here. If this was going to pull back here, then we can look at this low here. And this high, you can adjust that. If there's another little high there, then you can adjust that. So 38.2% retracement level is here, and this is the wave 4 of 1 lesser degree. So what we have to do is we have to take both of those into account. So this wave 4 here and the 38.2% retracement level. So we could say that if the market moves down below here or finds this level here as resistance, then messed that up, didn't I? Anyway, yeah, so it's really only here that we can short if that becomes the resistance here, which leaves us close to this point here. So so there'll be a bounce off this area here too, so that's not going to make it any easier as well. I'm not talking about scalping, I'm talking about getting into a trend, but we have a nice trend to the upside here, so we have to be very careful about shorting. We don't want to short the market without any evidence as such. Yeah, so just checking. Let me just check the cash. It's not much clearer, but what we can do here is the 21,500. It's an important number. Well, the 500 is the important point here. 5 being the second strongest number after 1. So if that became the support, then you can trade long from that point and go up even higher. But it would take a while to be the arrival, the reaction, the first high above the level, a corrective pattern, and then up from that point. So I'll just leave it at that. Let's just see what occurs here, and there will be selling pressure coming into the market, being the equinox. So let's just see how that plays out, which is actually tomorrow, depending on what hemisphere that you're in. Alrighty, that's it. Thanks for tuning in. Cheers.